Retail sales come in much stronger than anticipated,
Actually,
up 0.7%. That's more than double what we had seen forecast. Ex-autos up 0.6, and ex-autos and gas up 0.6. So the retail sales control group, which is kind of the proxy for what goes into GDP, is up 0.6 as well. And the forecast was for just a 1/10 gain. Very quickly note, New York Fed services businesses report a lousy month, down 19.1 from 3.0, but it's the retail sales number that's going to catch everybody's attention today, and the interesting thing is how strong it is overall.
You've got 60 days of lift.
Really strong lift, because the August number revised up to 0.8 from 0.6. The August retail control group revised up to 0.2 from 1/10. So a lot of strength in retail sales over the last 2 months. Now, in the month of September, what we're seeing is a gain in motor vehicle sales of 1%, which is a little bit interesting. Of course, they calculate this differently than the seasonally adjusted sales number for auto sales, where they count units. This is dollar value. Electronics were down 0.8. That's the big loser, along with clothing and accessories, which is kind of interesting because it's back to school time still, I guess. The big gain on the month is, I'm looking here, is, well, gasoline up only is up 0.9, but that's not the big gain on the big gain on the month. Non-store retailers and miscellaneous store retailers.
Okay, at least in the markets.
We're getting some Amazon, Walmart business done there. And food service and drinking places, Tom Keene keeps the economy going, up 0.9.
I'd love your thoughts as we parse through all of this about a couple of misnomers, whether we're not actually seeing consumer price pushback on gasoline, that it's not actually crimping consumer demand as much as we previously thought, and that services spending still continuing to accelerate in a way that people didn't expect.
Well, you don't get a lot of services numbers in the retail sales report, really only the food services and drinking places. But that's kind of makes this even more surprising, because you don't expect such a big increase for basically buying goods. Goods sales have been dropping somewhat compared to services. Now, the Fed, have they done enough? That's going to be an interesting discussion for them, because is this really a continuation of, we've got pandemic savings and we don't mind spending? Is this a sign of real strength in the economy that will be inflationary? Now, Tom mentioned at the top that you have to deflate these, and durable goods inflation was down 0.4 in the last month in CPI. So this is perhaps even stronger than it looks. So it is an interesting question for the Fed.
What will these do to market economists' GDP guesses for this fourth quarter?
Well, definitely going to raise GDP guesses, and probably the CPI now number from Atlanta Fed, because this is just much stronger consumer spending than anticipated, and it is the last month of the quarter, so hasn't been incorporated yet.